How do you pronounce CHIHA? CHIHA.
CHIHA will do that. CHIHA. Second H is
Get a guru accountant on the northern beaches in Brookavale.
Yep.
Most importantly, before we start talking about anything, should Gladys Beriklian stay or go? Danny?
I think she should stay, maybe. Your personal life's your personal life.
Yeah, stay for sure. Stay for sure.
Stay for sure.
Oh, that's a clean strike because I reckon she should stay as well. But anyway, over to you,
All righty. Good morning, everyone. Welcome to Morning Minutes. Myself, Michael Burgio, Mark Novak, and special guest, Danny from Kelly Partners, here to talk about the 2020 budget and how it affects you and really just simplifying it for all of us. Welcome, Danny. Thanks for coming on.
Thanks, boys. Thanks for having us.
Thanks, Danny.
Sort of overall, just how are things going? Well, what do you do? Where are you from? Just give yourself a bit of a wrap.
Client director, Kelly Partners, Northern Beaches. We run an accounting firm on the beaches, looking after small businesses mostly, small, medium business, help them navigate their financial world, their tax, get them their best results, and make sure they're protected and have some ambition and confidence to go and act in the market and get some results with their teams. Business with everyone on the beaches that we're seeing, same as you guys probably. Some people doing really well, some people struggling, and we're just trying to help people navigate everything that's going on in the world. There's constant legislation changes, things going on with COVID, that a bit of uncertainty for everyone.
Danny, what are the numbers? All of us are hearing national numbers. We're hearing New South Wales numbers. Now, the Northern Beaches, Michael, has 6,000 businesses. Is that right, Michael Burgio?
Yeah, around there. 6,000, yes.
6,000 businesses. Danny, you're working at one of the most successful accounting firms in the area. You guys have 7 accounting firms. So how many accounting firms in New South Wales? 15. Now, just quickly before we get into it, and hand on your heart, people that are like this since COVID, and people that are like this since COVID.
Without being able to confirm a percentage, it's very circumstantial, the people that are struggling. We're talking, 10, 15%, and it's very, we're talking the travel agent that does specialized travel to surfing in the Maldives. We're talking about hospitality in city regions, those guys that are in specific events and industries that have been directly hit are being hit.
Okay.
For the most part, the clients we're dealing with in construction, real estate, local cafes, things like that, are all doing as well, if not better. Their performance, their trading isn't necessarily better, but with all the government funding and that they've got, they're actually richer at the moment in cash in the bank.
The net position
today. What the government are trying to navigate, in my humble opinion, is how they don't just stop all the funding and everyone drop off a cliff. They've spent so much money to date, they've kind of all in that they have to keep investing into these businesses to make sure that they can carry them through this. But right now, most people's net cash position is a lot stronger than it was 9 months ago.
And that's sort of where the 2020 budget comes in. Everyone's doing good now, but there's so much speculation. JobKeeper may end, the rent incentives are going, the mortgage fees are going. It's realistically, besides those really specific businesses, you weren't meant to go under now. This is all this is a lot of help. It was almost hard for some for a lot of it where the wages. So the 2020 budget, not hard to, it's wrong to say, but you get the gist. The 2020 budget is really now, how are we going to survive 6, 12, 24, 36 months now? Because that's where you're going to see people drop off if things don't happen. Do you think the 2020 budget sort of is going to help with that, the overall? Did it hit the mark? Was it as good as it could get, or is it just crap?
They've done a lot. It's hard to do much more, and they've done a lot. And we'll go through some of the stuff quickly. I mean, when I say they've done a lot, they've tried to spur business. They're trying to help where they can. JobKeeper's been extended to March, so even before the job budget got announced, that extension was happening. I think job seekers to December at the moment, with the likely increase to March as well. But I think for me, if Melbourne didn't go into the lockdown that it did, I reckon the JobKeeper wouldn't have got extended and this budget wouldn't have been as big as it was. I think Melbourne getting that extended lockdown has meant the government throwing more money at the whole country. Take out Melbourne. Take out Melbourne from the scenario. I think that we've got a different budget and a different outcome. I think they're just really trying to get enough money in to keep Melbourne alive.
Hey, Danny, question I've got is, because you're the man on the street, you're talking to the local businesses. You've said that 9 out of 10-ish businesses are doing okay, 1 out of 10 struggle street. With that 9 out of 10, and with that's a lot of that's from government assistance. My ears prick up, and I think that means there's going to be a cliff, because when the government assistance goes, then everyone's going to fall off the cliff. How big is that cliff? And is it the situation where if government goes across and halves JobKeeper, that's enough to put that 9 out of 10 in jeopardy? Or how big is that cliff is my question. You're like, or if they get rid of JobKeeper, is everyone actually still going to be reasonably okay? Talk to us.
Yeah, it's hard to say, and obviously we're generalising, but my gut feel again on this is I think the slowdown of JobKeeper is actually a good way to approach that. The way that they're taking it down to 1,200, then down to 1,000 over the next 6 months. What I think it is, Mark, is I think it's more about the mentality of it. So what's happening is I saw it with childcare as an example. When we all of a sudden got free childcare for a 3-month period back in June to where it was August, it was actually difficult mentally to go back to having to pay for childcare. The same thing's happening with JobKeeper right now. Like the mentality of the business owner is changing in a way where there's almost like an entitlement to JobKeeper, as in like the way the way people are speaking about it is if like, hey, I've got to still get that money, more as if like it's owed to them than if it's to help them. So I think that next 6 months is more about weaning us off the drug, weaning us off JobKeeper, so that we get to April and we're not relying on it mentally more than the business is, and then adjusting our business back to where it was before. Like, people are. You guys are probably seeing this in real estate. People are looking to buy houses. People are looking to invest off potentially government funding for a little bit of that. So yeah, that's probably the thing is mentally people have to go back to before and work for their money.
A bank saying that, your business doesn't work without JobKeeper, I'm not going to give you a loan.
I haven't seen much of that. I haven't seen many. I'm sure they are. It's not my space to comment, but I haven't seen many lenders come back questioning their government money. And that's probably because when we're providing financials at the moment, we're still providing 2019 for a lot of clients going to banks. They're asking for 2020 management reports and things like that, but I think assessments are still getting done on 2019 full numbers. So that will probably come in post December 31 when they have to ask for 2020 numbers.
I've got so many questions. I'm sorry, everyone. I've got a Indian restaurant close to me, and they used to trade 7 days a week, and now they don't trade when I always want to go there, and I swear that they're not trading because they're trying to keep under the 30% threshold. Is that real, or is that going on in my head?
No, I've seen that a couple of times. So people have shut hairdressers, people have shut cafes, people have shut all sorts of things for days just to. Like to be fair to those people, Mark. To be fair to those people, some of them are at 27% down turnover, or 26% down, and they're trying to kick themselves over the edge there, rightly or wrongly. But I think the point in their head that how they justify it is we're going to miss out on this help to get us over this next hurdle by 3 or 4 or 5%, where as opposed to being breaking even together.
And they think if the herd hasn't come, it may hurt in a month. I don't want to come off it and then have to try and get back on it. It's
yeah. And it's a with people to
stay open. Economy down.
Another problem altogether, mate.
I've seen that as well. We go into as a rentals agent. Obviously, commercial tenants ask for discounts because they're on in these entitlements, and then you walk in and on their counter it says 10 or 15% off for cash purchases in the business, and you're thinking as an agent, you've been whinging for like how long, and you've got this is new on your counter. That is new. It was not there pre-COVID. There's an awful line there, and that we probably don't want to talk about.
No, but your point is people are trying to manipulate the situation, and that's what's kind of getting at. Like, there's an entitlement to these government incentives, and people are doing whatever they can to fall in. And obviously, this isn't an everyone thing. This is the majority thing, but just the mental piece of it all is I'm expected that I'm going to get that next kicker from the government. Everyone's kind of taking that view.
All right, you've kindly put something together for us. I'm going to bring it up and let's go with share. Oh shit, wrong button.
Nail it software.
Yeah, almost deleted the whole Facebook thing. Where is it? There. So, do you want to talk us through the document about bring up how do you use it? Why did you put it? Was it just for this, or is this something that goes to your clients?
No, so our tax consulting team put this together on budget night. It went aground at 11 o'clock on budget night. They've done a really good job to pull this together fast. It went out to all our clients. It's on our website. If anyone wants to get a copy, you can download it there. But it just summarizes essentially the major budget points. We're not going to go over all of them today. We'll just go over a couple of them, I guess the most impactful ones. But it just quickly touches on a couple of the major points out of the budget and what they mean for businesses. Our clients are all business owners or just about, so just goes through what it means for them. I'll just run you through the major ones. Is that cool?
Yeah, which one start with?
Let's start with
it would be great because I think everyone who watched the budget, if you got every single nugget, understood it, comprehended it, and applied it to your business, I think you'd have to be a genius. So it's one of those things that you sort of got to listen to what Danny's saying, see if he can identify an extra nugget that you may have missed. So for people to think, yeah, I know about the budget, I think this is important to continue to watch what you're talking about, the notes, because I'm keep listening to that budget and I keep finding stuff in there that I missed. Let's go.
But which one did you want to start with?
Right, let's just go top to bottom. So start with lower personal tax. So the nice table that you liked. Next page.
Yeah. Cool.
All right. So all this is everyone. This impacts every single person working that's earning over $37,000. They've adjusted the low income tax thresholds. I think this is probably the one that most people understand. Essentially, previously up until $90,000, you were paying 32% tax. That's been kicked up to $120,000. That's the major benefit. It's $2,000 for people on the higher end, $1,000 for people on the lower end. You'll start to see that flow through in the next couple of weeks into your pay tables in Xero and MYOB, etc. So people will actually start to see that cash in the next month or so.
So that will be the employer changing the tax they pay you, and you'll get it directly from your pay. You don't have to do a tax return and get it back. Is that correct?
There'll be when you do your tax return, you'll get a kicker for the first 6 months of the year. That will come back with your tax return at the end of the year. But you'll start to get on an ongoing basis moving forward. You'll start to get the weekly amounts through.
Hey, thank you.
That's not a bad one. So that's easy to understand. I think most people get that one.
Okay.
Let's go next one.
Next page.
Yeah, next page. So that's the major one for most everyday people. Now if we start talking about the business, and that personal one does play into tax planning and things like that. Like when you're distributing from discretionary trusts and trying to get money out to people at the right tax rates, that does play into that. So that's where that will come into consideration at the end of the year for a lot of people, business clients. This is a big one. So this is a big one for probably bigger business as much as it is for smaller business and small, medium business. Essentially, you know how we had that $150,000 asset write-off rule?
Yes.
Yes.
That's been extended for 2 years till June 2022, and it's been taken up to be, not a bad one, and it's been moved to be unlimited. So basically, any money.
Unlimited.
Yeah. So if you think about it for you guys, the exact rules aren't 100% clear yet, and we'll wait and we'll see those when they say certain assets or eligible assets, what they mean by eligible assets. But point being, if you think about it for you guys as commercial agents, when a restaurant comes in to move into a new lease, potentially that whole shop fit out becomes deductible upfront in the year that they move in, as opposed to doing it over, 5-10 years or whatever that term is based on that asset. So that's pretty big
that's really interesting. Can you explain that slowly for us? So normally when a restaurant took a new shop for a 10-year lease, if that restaurant spent $150,000 doing a fit out, they would have depreciated that $150,000, say $15,000 a year.
Yeah. So some rate, whatever that rate is, they would have done it over a 10-year period.
Right.
Over that lease term. So instead of doing that, they can, and that obviously is a big difference. Instead of doing that, they claim that whole $150,000 in the first year that they spend the money or start operating.
Fantastic.
Yeah, so it makes a big difference. And to flow that a bit further, if you think about, like, I don't know how many of your commercial tenants pay that in cash, or when I say cash, like pay that through their own money, or finance that through the bank, because you can actually finance the 150, pay it over the 10 years, but get the tax benefit up front.
Oh, wow. Okay, that's big.
Yeah, so that all plays together nicely.
And that's going to 2022.
1 July.
And how many of those 150s can you do? As many as you want?
So it's gone from 150 to unlimited. So firstly, so it's not 150, it's actually moved to unlimited. Secondly, basically as many as you want. It's on a Say it again.
What was that?
Yeah, I was just saying, Mark, you can do a whole new fit out.
Yeah.
Start again. Unlimited. And cars are included in that, aren't they?
Cars are included, but they cap at the luxury car rate. It's about 57 grand. So cars, unfortunately, get capped at 57, which, unless they're like utilities, utes, trucks, vans.
Okay.
Wow.
So new fleet of utes going around for Novak, I reckon, next year.
Yeah.
Yeah.
That does play nicely, and it flows nicely into the next slide. Like, it interacts nicely with the next incentive that the government put in. So this loss carryback rule, if you have a loss in your 2020, 2021, or 2022 tax return, normally what would happen with those losses is they would carry forward until you make a profit, and then you can offset the profit against the loss. This initiative, it's something they've done in the past that they've rejigged back up, is you can use those losses to offset against past paid tax, not necessarily future paid tax. So if you had a profit in 2018, but a loss in 2020, you can get some of the tax back you paid in 2018 in cash when you lodge your 2020 tax return, 2021 tax return. That kind of makes sense. So
I've no idea what you just said.
so I'll try and just say the same thing, and hopefully it makes sense the second time. When you've got losses historically, so if you lose 100 grand this year in your business, you get no tax benefit. That loss carries forward till a future year to get a benefit. Yeah?
Yep.
Under these rules, if you have a loss in 2020, but you've paid tax and made a profit in any of your prior years, you can actually offset your 2020 loss against a prior year profit and get some of the tax back that you paid in prior years in cash when you lodge your 2020 tax return.
Okay.
Wow.
So what they're trying to say there is, we expect there's going to be a lot of businesses that run at a loss in 2020, 2021, 2022 because of COVID. I'll give you some of that tax paid back so they can help you support the business. Where I was kind of saying this plays nicely with the rule above is, if you've done these big shop fit outs or stuff like that in 2020 and 2021, where you can depreciate all these expenses up front, yourself in a position because of that, you can then also get tax back from prior years. You don't just have to carry that depreciated loss forward.
So you had a huge 2019, 2020 is okay, but spend $500,000, get the depreciation, get the loss, claim it against the big win last year.
Correct. And then, so essentially you get your GST back and you get your 30% tax back in the one tax return. It actually makes your shop fit out 40% cheaper.
Wow. Okay.
Wow.
So it's pushing, it's giving you incentives, but it's really striving you to spend, because if you do a fit out, you get labourers, you get your contractors, you get your plumbers, you get your sparkies, that stimulates them. It's all about just spending money.
Yeah,
Okay.
just getting that money moving around the economy. Like they've put a couple $100 billion in, they just want it to move.
Yep. Okay.
I'm
Next
asking
point.
a lot of questions. I'm asking a lot of questions, but our viewers, feel free to ask any questions. You're going to have to be on Michael Novak's personal, Mark Novak's personal.
Yeah.
I think Michael's got the iPad there. Sorry.
Yes.
Just ask away, guys, if you've got any questions. This is free advice from a guru accounting firm, an accountant in the Northern Beaches. This is a great opportunity to ask you questions. To be honest, I reckon you're doing a cracker job, because, I feel like I've missed half of what was announced now that you've been speaking the last 10 or 20 minutes. It's great.
Let me put disclaimers around the free advice piece. Don't worry. We're waiting for guidance from the government on the actual implication and how we're going to...
Okay, sorry about that. But, if we can talk about Gladys, if we can vote on Gladys Berejiklian at the beginning of this episode, we can do anything.
Yeah, that's true. Yeah, that's true.
Disclaimer, people, don't take note of anything we're saying. There you go. But it sounds good. Next point. Okay, we had the loss carry.
Yeah, let's talk about Top Maker quickly, and we'll talk about this one also. So this was really good. Also, I thought pretty smart initiative to try and get people to start rehiring people who are right now. The government's paying people job seeker. Essentially, they're paying them $350 a week or a fortnight or whatever it is to do nothing. What they're trying to do is move that money to the business to give them a credit to hire people who are on job seeker. So government said, either way, we're paying the money more or less. We'd rather give it to the business to try and get these people into a job. So if you're thinking about hiring someone, smart. Yeah, if you're thinking about hiring someone who's on job seeker currently, you're going to give them more than 20 hours a week. You get a $200 a week credit to hire them. So, basically 10 grand a year off the first year of employment, anyone you hire in the next 12 months on job seeker.
That's so good.
Yeah.
And so to read between the lines, rather than sitting on the couch and getting paid and taking the government's money, the government would rather you go and work to earn the same amount of money potentially.
Correct. And they're happy. They'd rather support the business to employ the person than pay the person to sit at home. Smart. Yeah, smart. So it's
investing in training and all that stuff, isn't there? They're going to support and pay for training. So people out there going, well, can't just hire anyone. They'll take care of training, or there's some sort of money for that.
So that's a different initiative again. So they've got a whole bunch of extra training programs and things like that they're going to support and pay for. They've extended the apprenticeship, pay 50% of apprenticeships and things like that. So that's all part of that job maker program. Most of that had already been spoken about and announced. The extra part was the $200 a week credit that they'll give to you if you hire people who are on job seeker.
Beautiful. Okay.
Yeah, really good. Really good.
Next.
The rest of those slides are pretty circumstantial. I think they're probably the main ones for business owners. I think the only other thing probably to touch on that we're dealing with, and we kind of spoke about it already, was the JobKeeper 2.0 stuff. Yes. So people are reapplying for JobKeeper at the moment from October to December. JobKeeper finished 30 September, that first round of JobKeeper for most businesses. And they said, again, because of the Melbourne lockdown, they've said, here's some new measures to test. If you're down 30% on September versus last year, based on your actual result, we're going to extend the JobKeeper for you for another 6 months at a different rate, for another 3 months at a different rate. On the surface, when we looked at that, it was very black and white. It looked like a lot of people 99% of businesses weren't going to be eligible, especially in Sydney. As I said before, most people weren't feeling the pinch as much, like not everyone's feeling the pinch. But while we've got into these rules, there's actually 10 ways to be eligible for this extension on JobKeeper. And we're finding a lot more people are actually eligible for the extension than what we originally thought would be. So, double check your numbers there and make sure you're getting that looked at properly. Don't just take for granted that I'm not down that 30% in September quarter versus last year, because there's a lot of reasons why that could be, and there's plenty of people that have actually fallen into being eligible.
And the is pretty, they want to help you. I know we spoke about that before, about JobKeeper and the 30%. They're not like you're 29% down, you're not getting it. Is the government still pretty open to just getting people on the support, or is that had a shift?
No, it's changed now, but it's very much you either meet the rules or you don't now. There's no flexibility in it. And they're really only trying to find these businesses that are hurting. And that's why Mark's seeing his Thai restaurant or whatever it is shut down for a couple of days to get over that threshold, because there's no flexibility in it anymore. Which is it's a good and a bad thing. Like you have to draw a line somewhere. It is what it is. It's like doing wedding invites for a Lebanese wedding, mate. You got to invite who you can fit in the room.
Very true.
So they have to draw a line. They have to draw a line somewhere. But the point I'm trying to make, I guess, is it's not as black and white as being 30% down on September versus September last year. There's 9 other ways that number can be tested to see if you can qualify. So more people did qualify than we thought were going to, based on just the pure 30%.
Okay. And just to wrap up as well, just for anyone listening out there, how can you help personally if they're a business out there? What do you do for your clients? And I'm putting your contact details in the chat as well. So if anyone thinks they need your advice or assistance or how you can help, do you do a bit of everything for a business, or do you specialize just within, I don't know, something specific?
So we deal with small, medium business owners, and what we essentially help them do is get control of their business, get control of their financial universe. So most people's relationship with their accountant is very transactional, of here's a BAS to pay and here's a tax return to do, and it's not very collaborative. We try to work
too much.
Always, mate. And we try to work really collaborative with our clients, and on the charging piece, we try to work in a world of certainty. So everything we do is fixed fee, quoted up front, so everyone knows what they're paying before we do anything. And it's very much about giving that forward-looking advice. So most people's complaints with their accountant that we hear is they don't get back to me. When they do get back to me, it's very much about how much I got to pay and normally late. Whereas we're trying to work in a world where we do your BAS, but at the same time as doing your BAS, we're looking at your business and giving advice on what's working, what's not working, how can we help there. So our business is very much built around helping business owners get control of their business and make decisions moving forward.
Perfect. I can contest it, and available all the time. I know my mates joined. I think it was Lights Power Action. Joined with you guys, and they see we talking. That was the main thing they loved about you guys, were available basically same day and on the weekends for the phone call, and to just ask general things. Because I find a lot of people, well, their comments were they always felt it was very formal to go to their accountant just for a little quick question sort of thing, and that's what they really loved about working with you guys. I think it's with a lady there, I'm not sure who, but yeah, they're happy
but I agree with that point. Like Brett done a really good job of identifying that problem and made sure that everyone's accessible all the time. Like the reality is, you guys are business owners, you're trying to grow a business, it's not an easy thing, and if we're going to be here to support you as a partner, we need to be able to kind of help and answer those questions, and that's literally the story for most people.
Perfect. Mark, anything else you want to add? That was great. Lots of people watching. We've got the documents on the website. I've put all the website details there. So hopefully that really helped everyone.
Awesome.
Anything else you want to add, Danny, onto that? Or is that?
No, man, I'm good. That was good. If anyone has questions, please reach out. We're more than happy to help where we can.
Awesome.
Yeah. And it just goes to show, guys and girls, if you think you know what's happened on the budget and you sort of understand it, but you don't understand it, if you watch the last 20 minutes, it was enlightening for me, and I thought I had my head around it. So, buddy, thank you so much.
No,
we've done 3 topics on the budget, and basically everything was new in there. So it just shows. It's
a testament to our tax team. They're on the ball internally, and they're able to answer these. They're able to pull these stuff out and build this strategy really fast. So we'll obviously roll this out as we get towards year end next year and get really clear on how we can save all our clients some tax.
Yep. And just remember, anytime something big changes and you want to get the message out, we're always here. Love doing the show with you and appreciate it.
I appreciate it, boys. Yeah. Thank you.
Thank you. Cheers.
Have a good one.